Hey everyone, and welcome back to the second earnings video of tonight. We already covered Shopify. If you missed that video, it's going to be in the top right corner. This video, let's talk about PayPal. PayPal at the time of making this video is down around 6 to 7% or so, despite beating expectations. But unfortunately, that's not enough. Now, there are some things that if you don't really dive into the report, you might say, why is there negative free cash flow? How can that happen? What has happened there? So we're going to talk about all of that, but I do want to start with the first negative aspect of this report, and that's maybe one of the major reasons why the stock is down so much. And no, I have not seen anything about the new CEO. So as you can see right here, actually it's two things I want to discuss. One is active accounts. That's down 1%, so that's already not that great. And then two, it's under TPV, so total payment volume. If you look at transaction margin, that has yet again decreased. So we're now at 45.9%. We were at 47.1% last quarter. Then if you look at 2022, well, we were 49.7%, 51%, and 48.7% there in the same quarter last year. So this is not a positive thing. If this keeps declining, well, it's just trouble for shareholders. Now, let's start with a little comment here from the current president and CEO. So our second quarter results show continued momentum. We have high confidence that our business is on the right path, and we're seeing clear signs that the investments we've made are paying off. Our teams are energized, and I'm confident that we're well positioned to continue to grow our leadership in digital payments. So if you look at the GAAP and non-GAAP numbers here, so net revenue increased 7% year over year to $7.3 billion. Operating income 1.1 billion GAAP, 1.6 billion non-GAAP. That's a 20% increase year over year. Then EPS non-GAAP $1.16, 24% increase year over year. Or if you look at the GAAP metric, 92 cents, an increase of 414%. As for the CFO's comments, so PayPal delivered another solid quarter with revenue at the high end of the guidance. We continue to invest in our key initiatives while delivering on our operating expense commitments. The agreement to sell our European buy now pay later receivables to KKR helps optimize our balance sheets and is another example of disciplined capital allocation. If you don't know what I'm talking about, they talk about it in this presentation. So European pay later receivables sales to KKR, optimizing PayPal's balance sheet, unlocking free cash flow for strategic initiatives. So this was announced on June 20, 2023 and expected to close in the second half of 2023. What will this entail? Well, exclusive multi-year agreement for a 3 billion euros replenishing loan commitment under which private credit funds and accounts managed by KKR, by the way, that name, it's a bit strange to mention every time, will purchase up to 40 billion euros of buy now pay later loan receivables originated by PayPal in France, Germany, Italy, Spain, and the UK. PayPal will remain responsible for all customer-facing activities, including underwriting and servicing. The transaction is expected to generate $1.8 billion of proceeds upon closing. PayPal now expects to allocate approximately $1 billion to incremental share repurchases in 2023, bringing the total expected fiscal year 2023 share repurchases to $5 billion. And they already acquired quite a lot of shares throughout the year, which they mentioned right here. In Q2, they repurchased approximately 22 million shares of common stock, returning $1.5 billion to stockholders. On a trailing 12-month basis, they repurchased approximately 63 million shares of common stock, returning close to $5 billion to stockholders. Now, since we're already here, if you're looking at free cash flow and cash flow, you can see operating cash flow, net inflows of $1 billion, but then a loss of $1.2 billion. That's because of the held for sale impact. So operating cash flow of a loss here, $200 million. Now, if you adjust that, so free cash flow, adjusted free cash flow, last year, $1.1 billion. This quarter, free cash flow was a loss of $400 million. Adjustment for the HFS impact, $1.2 billion. And so if you adjust it, the adjusted free cash flow is $900 million. Now, if we look at operating highlights, operating margin for this quarter, 15.5%. That's a year-over-year growth of 432 basis points. If you look at net income, just over $1 billion, an increase of 402% year over year. If you look at non-GAAP, operating margin there increased 228 basis points to 21.4%. Net income increased 19% to $1.289 billion. Now, as for the financial guidance, they beat the estimate, so net revenue expected to reach approximately $7.4 billion, growing around 8% on a spot and FX neutral basis. If you look at GAAP, earnings per diluted share expected to be 85 to 87 cents compared to $1.15 in the prior year. As for non-GAAP, that's expected to grow between 13 and 14%. Now, as for the full year guidance, GAAP earnings is expected to be $3.49 compared to just $2.09 for fiscal year 2022. They're also reiterating non-GAAP earnings diluted per share. This is expected to grow approximately 20%. And with regards to the GAAP earnings, they did raise the full year guidance there. Now, I do want to touch on Braintree for a second here. So first up, expanding key merchants relationship in international markets. So they announced here a multi-year agreement establishing PayPal as one of Booking.com's strategic card partners globally. And with regards to transactions per active account, first of all, that has reached 54.7, so that grew 12%, and the 12% growth in TPA was predominantly driven by transaction growth from Braintree with contribution from core PayPal. Now, as you know, Braintree, PPCP, lower margin than PayPal core business, so branded, unbranded checkout. And when looking at the major overview for PayPal, it's only up 2.7% year to date, and probably with the after hours action, it's going to be back in the red. If you look at valuation, it's not expensive at all, PE of 14.3 times. If you look at the analyst estimates for fiscal year 2023, EPS is expected to grow around 19.6%. For fiscal year 2024, another 14.72%, and then fiscal year 2025, 11.5%. Of course, when you look at the top line growth, the sales there is not growing double digits. So to conclude, while overall the big picture, everything looks fine, this report is okay, I think the major worry here is the transaction margin. If that's not improving, well, maybe it's just not worth your money to buy PayPal currently until there is some positive momentum. They still have the second half of the year to prove us wrong. Of course, in the meantime, there's still some cash flow besides this one-time thing here. They're still repurchasing shares, so that's one way of increasing shareholder value. But overall, there needs to be some improvement when it comes to transaction margin. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.